Okay, we had a very, very sharp sell-off on the Fed rate decision, and even more so when we got Powell's press conference. The Fed extremely hawkish, again, when they should be dovish. More about that in a minute. I'll talk about some of the highlights and what it means for the market. A very ugly day. The Dow dropped 2.58%. It was down over 1,200 points at the lows of the session. It closed at 1123. I believe it dropped below 1,200, but down to 42,326, down over 2.5%. The S&P was down nearly 3%, 2.95%, down 178 points. Again, moving away from the 6,100 area that we had just went up and flirted with there. 58.72. The NASDAQ was down over 3.5%. The Russell down 4.39%. I believe it was down over 5% at the lows. The VIX up 74%. 74%, jumping by 11.75 up to 27.62. So volatility sharply increasing. Do want to say this. The VIX is predicting, and you throw this out the window when you start going parabolic on the VIX, but the VIX is predicting right now that in the next two trading sessions, and we could get it with the PCE data on Friday, the inflation data, and then we move into the holiday trading, very, very light volume, probably see a rally back up. But the VIX is predicting now a 95% chance in the next two trading sessions we get a bounce or a bottom, that we have a rebound. Again, 5% chance it's going to be wrong, 95% chance. We could go a whole lot lower. Great Scott, did you hear what I just said? We could go lower before that prediction happens, but the VIX, based on historical data, the historical closes, when you get these moves of greater than 20%, which we have now had, 74%, get a bounce or a bottom. And I've been predicting that volatility is going to sharply increase because of the 50 being above the 200 that I've talked about in nearly every single video. About that later, but just wanted to let you know that. Now the Dow has a 10-day losing streak. The Dow has its first 10-day losing streak since 1974. People listening to me, a lot of people listening to me right now, weren't even alive in 1974. Probably quite a bit of you. We get this big sell-off. The Dow down over 2.5%, the S&P down nearly 3%, the NASDAQ down over 3.5%, and the Russell down 4.39%. This big sell-off, this big down move. Oh, that's not supposed to happen in December. I told you, we could get a top in December or in January because, again, the market peaked in 2018 in December, and it sold off very quickly by 20%. Surrounding what the Fed was doing back then. The market is selling up because the Fed, although they cut in December by a quarter point, they're indicating fewer cuts ahead. It was expected that we would see 4 cuts in 2025. Now that's been reduced to 2. I want to tell you, once again, this is the narrative I've been talking about. The conventional wisdom now is that we're gonna, Powell even said today, and I can't believe he said it. I mean, he said that we've now, let me get the exact quote here. It's clear we've avoided a recession. We're about to move into recession, and the Fed is clueless, absolutely clueless that we're about to move into recession because believe their own narrative, the soft landing nonsense. Now the Fed is extremely hawkish, making a huge monetary policy mistake. I mean, absolutely a massive mistake and oblivious to the recession that's about to start. Why? Because if you listen to the press conference today, the Fed's completely focused on inflation. They're extremely hawkish. Just like before when the inflation was coming in, they kept telling us, oh no, it's transitory, and they were dovish, the complete opposite to what they should have been. They should have been extremely hawkish and started jacking up rates immediately. They were late to the party. They ended up having to do jumbo rate hikes. They're going to have to do jumbo rate cuts. Now, everybody, listen to me carefully. Conventional wisdom now, all over social media. I was looking. Ben, going to get this soft landing out of the Fed, get fewer cuts. The market's throwing a little temper tantrum. I warned you was going to happen. Third believes the cuts are bullish. The cuts are bearish, associated with the recession. Warned you before the recession hits and the Fed being blindsided by it, which they're going to. Nobody believes, right now, nobody believes that a recession is about to happen. Why? Because they dismiss all the recession indicators. They ignore them. Fed has dismissed warning signs. He is laser focused on inflation. If you watched the press conference today, you saw that. Warned you before today's press conference that, again, the narrative is going to eventually be, we're going to get fewer cuts out of the Fed. I told you eventually the market is going to throw a fit about that, which it's starting to right now. It's not over yet. Actually, the market's going to get what it wants. It's eventually going to get the rate cuts. Right now, all the experts, we're only going to get 2 cuts, and maybe we're going to get none. That's what the experts are saying now. Maybe the cuts are off the table completely for 2025 when we're about to move into recession. Didn't watch my Sunday video about the uninverting of the yield curve between the 10 and the 3-month, which we just had. When that happened, again, it means we're getting closer to the recession. When that happened, after it did, we moved into recession within just a few months. Nobody thinks we're moving into recession at all. If you did not watch that video, you've been busy Christmas shopping. I'll link that video again at the end of this video. Make sure you take the time to watch it. And again, the first 10, 12 minutes or so are NASDAQ, but then the rest of the video, I talk about what happened previously. Inverting of the yield curve and how, again, just like 2007, the Fed was laser focused on inflation, which was higher than it is right now. And yet they still did jumbo cuts. The recession showed up. They were totally blindsided by it, just like they're blindsided right now about the recession that's about to start. I talked about that. I told you right before the recession hits, because remember I kept saying Powell is continuing to say there's no rush to cut. There's no hurry to cut rates. A good place the economy is strong. He doubled down on that today. And again, extremely hawkish, even more hawkish. The market is now expecting 2 cuts. What the Fed said today had some Fed officials, don't think they were voting members, but some Fed officials that didn't want to cut it all for December. This was a hawkish cut by the Fed. This is an extremely hawkish Fed. We're about to move into a deflationary bust. I have a 10-day losing streak on the Dow. It's probably going to end up rallying back up on lighter volume over the holidays. A surge with the dollar and the 10-year yield. But Powell said they're still on track to cut rates, just at a slower pace. And I want to point this out again. Powell said it's clear we've avoided a recession. No reason to think a downturn in the economy is more likely than it usually is. The outlook is bright for the economy, but we need to see further progress on inflation to get more rate cuts. He made that clear. He kept repeating that thought over and over. They're focused, laser focused on inflation. And in 2007, inflation went up. I'm telling you, it's going to likely go up. But the Fed is going to come in and they're going to end up doing jumbo cuts, being blindsided by the recession that's about to start, as they always are. But he said the economy is strong overall and downside risks have diminished in the labor market. And he said his exact words were, downside risks in the labor market appear to have diminished. Exact words. Labor market, as I've continued to point out to you, labor market is deteriorating. As it did right before the recession in 2007 began, the same exact thing. I've talked about that. Powell said that policy right now is still restrictive, but they need to see further progress on inflation to get cuts. Again, he continued to say that throughout the press conference. He said, as we think about further rate cuts, we're going to be looking at the progress on inflation. So again, totally laser focused on inflation. Economic activity has expanded at a solid pace. The forecast for inflation from a few months ago has fallen apart, he said. Expected inflation to be lower, it's not, and now ready to do battle as inflation goes higher. And remember, when inflation surged in 2008, the Fed was slashing rates. Eventually, 11 months later, the deflationary bust appropriately dealt with inflation. The market's selling off. It doesn't like the idea of fewer rate cuts. And as I told you long ago, the wisdom, the conventional wisdom, and now we're here, is going to be that we're going to get fewer cuts out of the Fed. The experts, the herd on social media, and the Fed, they all think we're going to have this soft landing. We should be battling inflation right now. Nobody sees a recession on the horizon, but yet the recession indicators are flashing, and yet everybody's ignoring them. Paul said they are still on a track to continue to cut, but again, he kept talking about how he needed to see progress on inflation. They need to be more cautious on further adjustments to rate policy, and again, addressing inflation. Paul feels really good about where the economy is. He expects another great year. He talked about the labor market not being the source of inflation. He did talk about the downside to the labor market. There's no risk of recession. That's my words. I'm telling you, the Fed totally blindsided to what's going on. It's like a drunk driver driving down the road. Doesn't see he's about to get into a head-on collision, and he overreacts. And that's what's going to happen with the Fed. They're going to overreact. And if they go into January and pause, going into the first quarter and doing this, I think they're making a huge monetary policy mistake. But that's what the Fed does. In 2001, they did it in 2008. They're going to do it again. With inflation telling us it was transitory when they should have been extremely hawkish. They were the complete opposite. They were completely dovish. And now they're extremely hawkish. This was a very hawkish OMC meeting. They should be right now, they should be extremely dovish. They bury their head in the sand. And that's why I tell you, again, they're going to have to overreact like a drunk driver because they don't see the head-on collision coming straight ahead. They don't see the recession in sight. Fed is expecting inflation is going to tick up slower pace of cuts. He dismissed the idea that they're going to raise rates. Big surge on the VIX. Now, again, the can of the VIX, it was up 74%. Let me just bring it up here. Up 74% today. Now, when we saw that big 150% spike on the VIX, it really marked the bottom. And we saw volatility sharply drop. We'll be watching to see what happens on Friday with the PCE data. But the S&P moving down sharply, taking out the 50-period moving average. The VIX jumping above the 50-period moving average. This just starts going parabolic again. The window, it's predicting right now that we'll have a bounce or a bottom. We could still see the market go lower, predicting we'll get some kind of bounce or a bottom, term bottom like we did over here in the next few trading sessions. But when you go parabolic like what we did, how we did with the sell-off with the pandemic, then that's when it doesn't work. 5% of the time when it doesn't work. Suggesting either Thursday or Friday we will have an update. We could go lower on the S&P before that happens. We saw the divergence there on the RSI. Sometimes the VIX bottoms before the S&P tops. Huge surge in volatility. I've continued to warn that we have the 50 above the 200. This is a huge warning sign that we're in a topping process. Maybe that's done. I'll show you some charts, let you make up your own mind of what you think. I'll tell you what I think. I just want to address the Dow. The Dow's now had a 10-day losing streak. Big push below this trend line. I talked about it. Good chance the Dow is now topped out. Same is true for the Russell. And we could see a rebound, possibly over the holidays. But as I've told you, look, we may see a December peak. We've certainly seen a big sell-off here ever since December 4th for the Dow. The first 3 trading days of the month for the Dow were right here. We had a down day, and then this one up day. All the rest of December has been down, these 10 trading days. So again, turning off of the trend line in the monthly time frame I talked about, the Dow turning off of the trend line in the weekly time frame, and the Dow turning off of this trend line right here, here in the daily time frame. Hey, do we get back above the trend line? Do we end up continuing to collapse towards the 200? or horizontal support. You have the possibility of a head and shoulders, a small one right here, if we try to back test the trend line or try to overthrow it, move towards the moving averages, or possibly a lopsided one here. But again, I'll be watching to see if we back test or do we get back above that trend line. Sometimes you that, and we're breaking the trend line on the rising wedge in the weekly time frame. But how do we close? Do we rally with the PCE data on Friday? Did we end up getting a big rally back up? But you got a pretty good shot that the Dow has now peaked for the monthly trend line that we heard so much scoffing, any kind of possible sell-off in December, and yet look at the Dow has had a big sell-off. In 10 days, the Dow has now dropped 6.30% or so. A big wide range bar here. So we'll be watching. Again, we, as we pointed out, had the 10 cross below the 20 this week, and now we're taking out the 50. I talked about possibly trying to bounce off this trend line or the weekly trend line. Trend lines have been broken here, and we'll see if we rebound and get back above it in the weekly time frame before the weekends. And again, I'll be watching for a possible head and shoulders here. Keep going. If we keep going and get a horizontal neckline, then again, a back test might be the right shoulder, moving back up, something like that. If we go lower, horizontal support, if we try to bounce sooner rather than later, we'll be watching that PCE data come Friday as well. What the market's reaction to that is. Talk about the multiple points of divergence. Again, this is likely a reversal, not a pullback. I told you if we bounced off the trend line, we could still hit the upper boundary, come back up here and hit the upper boundary, get a lower high. Now we're breaking this trend line. We'll see if we close back above it before the weekends, but we're hitting our 20 period, breaking it slightly. We'll be watching to see if we now get a lower high with the Dow. You got a very good chance that the Dow has now peaked. And we're seeing that rollover with the price oscillator, MACD, a lot of different indicators getting that rollover at divergence, giving us the sell-off of about 6.30% from the high. For the last 3 weeks, we're 2.5 weeks now. Close above the trend line, do we bounce off the 20 or do we go down further to horizontal support or even further to the 200 period moving average that the Dow breaks that losing streak? Now again, we got a pretty good shot that the Dow has now peaked if we rally back up and we end up getting a lower high. P did technical damage today. It broke the trend line, took out the 50 period moving average. We had a triangle. I told you triangles can break up or down. I told you I thought we might end up getting an upward resolution because we had a triangle here while the Dow and the Russell had sold off. We saw the Dow and the Russell continue to sell off. We broke horizontal support. We broke the lower boundary of the triangle, and we broke the trend line of support here. Now, again, if this is going to produce a top, we need confirmation and a follow-through, and then we need to see signals remain bearish. It's still possible that the S&P and the NASDAQ are diverging from one another. The NASDAQ is peaking right now, and the S&P is not. We'll be watching what happens. Over here, we broke the trend line right here, this red trend line right here. Broke down from the triangle there. The rally I was looking for with a triangle right there, like we got over here after we broke out to new highs. I told you we were going to get the Fed pivot rally. We got it. The rally that I was looking for, the triangle, even though I predicted a correction, we corrected sideways, we got this push down to the 50 period moving average. The rally that I was looking for happened right after that with the presidential election. I predict this bottom correctly, predicted this sell-off, but I told you I thought that the triangle was likely going to have an upward resolution, but I did tell you it can break either way, just as I've been telling you this triangle can break either way. Thought we had a shot at going back up there. We still may if S&P and NASDAQ end up diverging. Dropping nearly 3% if we recover, and then do we get back above the trend line here? We got back above the red trend line. We actually broke this one first, and the triangle, but then moved down to horizontal support from the July peak and the 50 period moving average. You're watching, here we are just below the 50 period moving average. We do have this support coming in right here. And again, there is the possibility of a head and shoulders here as well. We end up getting a back test and not able to move to new highs. So you could do the same thing I've been talking about with the Dow. The horizontal neckline is a little bit lower for both. What I'll be watching is over the holidays, on lighter volume, do we start seeing a recovery? Did we just peak December. That is certainly possible, and I've talked about that possibility. I told you it could be close but no cigar with the trend line here and the trend line in the weekly time frame. The Dow did hit it. The Russell did hit it, just shy of that other trend line on the NASDAQ, and the NASDAQ's stalled at the monthly trend line there, just as the S&P 500 has. Here's a 60-minute chart. Here's the triangle. We broke the lower boundary, then we broke down the 200 and horizontal support, and now we're coming down to this area here. Again, possible head and shoulders. Again, pay attention. We do have a little tiny divergence that developed on the daily here and on the 60-minute right here. Little tiny Class B divergence. You almost had two equal peaks there on the RSI, but again, I talked about a larger possible divergence developing. We'll see what becomes of this break now. Get the confirmation of follow through. Do we back test, but then set up a lower high? Does the S&P stop making new highs? We'll be watching for clues. Triangle did give us a downward resolution, as this one did over here. But then that bullish divergence showed up ahead of the election. I talked about that, and we surged up. The rally I was looking for right here ended up happening over here, the election and the Fed right there. Now, we had that Fed sell-off right there. It reached extremes. The RSI reached extremes, and I predicted a sell-off there. But I told you I thought we'd bottom around that 200. That was correct, and we bounced. At that bounced right, but right here I thought we had bounced from the triangle, but I did get the sell-off correct. Just wasn't done. We had the downward resolution. But I told you these triangles, they can break either direction. Ugly sell-off. Watching to see what happens here. We're becoming oversold now. We'll be watching. End up forming a divergence here with this, or do we just become oversold and attempt to rebound back up? There's a divergence over here. There was no divergence with this low right here. We actually got a higher low. Which will this be? We'll be watching. More selling pressure to the downside. Very well could. Let me just say this, and here's the S&P 60-minute chart up close. Again, you can see we were forming that triangle, and then we had the breakdown. Here's the Fed release, and then Powell's press conference. We sold off even more. Again, we're seeing signs of distribution. It's being camouflaged. I mean, we saw it over here. I've shown you the rallies are being sold. Go a little bit higher, and then the rally is being sold again, and this is what we keep seeing. So we'll be watching what happens here. Again, you're seeing distribution little by little. Institutions are going to be going on vacation over the next couple of weeks. See if the retail investors try to bid it back up. With the PCE data this week, we'll see what happens. S&P does have some support in here, again, at this area right here that we're coming into just a little bit lower, so we'll be watching that. If we move beyond that support, that horizontal support area here, then we have the gap fill here at 57.83, gap we got with the presidential election results. And again, 57.83 was the close right there. So again, another place to be watching, the gap fill back over here from the presidential election results if we take out this horizontal support area. If I zoom out with these divergences and extremes, again, they've called bottoms and tops, turned off the trend line there from July, and again, the triangle has formed. We're breaking down, so we'll be watching what happens with the breach of this trend line. And again, horizontal support level I talked about right here, the gap fill down here at that, what did I say, 57.83, I think it was, right in there before the presidential election results. And then if we lose that, then we have the peak at 56.70 right here from the July peak, right below that. And that's where we bounced off of ahead of the presidential election results and the Fed meeting over here in November. So this could be it if the S&P stops making new highs or doing more technical damage. When we rebound, we can't make new highs, or we get a back test or something like that. But it is still very possible the S&P will diverge with NASDAQ. Well, NASDAQ's topping now, as I talked about in yesterday's video. Bearish inside day, the S&P was going sideways with the triangle. Now we're going lower, and we're breaking this trend line right here. Again, we'll be looking to see if this divergence is now going to play out. We close the week out. What happens on the light trading volume over the next 2 weeks? What happens? We're trying to break down with that rising wedge that I've talked about, failing to meet these levels. So it's possible we don't reach it. But again, when you move into the holidays, again, the market can be easily manipulated up or down. So do keep that in mind. We still may end up reaching that channel, but we are doing some technical damage. So again, like I said, it could be close but no cigar. You could still see a December peak here. If the S&P and the NASDAQ end up diverging, and we see a peak right now with the NASDAQ, which has been moving to new highs, while the rest of the market has been selling off and S&P has been going sideways, can S&P go higher and it ends up diverging with NASDAQ? That's still a possibility. That's what happened over here at the 2022 top. Diverged from one another. Like I previously mentioned, this trend line right here, do we close back below it and do serious technical damage? Do we continue to sell off, or do we rebound and close back above that trend line? Again, it is still possible we see the S&P and the NASDAQ diverge from one another before all is said and done. We have that right now. The NASDAQ made a new high. The S&P did not. NASDAQ made a new high earlier this week. The S&P did not. The divergence between the two, talking about the NASDAQ peaking now and setting up a lower high later as it did back in 2021 and 2022, could we see something similar to that like we had over here? The S&P still makes it up here. That's a possibility, but it is also possible that we are peaking in December, as I've talked about that being a strong possibility, and it, again, is possible it's close but no cigar. I told you I thought we'd reach this level. I told you if I'm wrong about that, we could see it close but no cigar. The MACD is now trying to roll over. We'll see what it looks like by the end of the week. We still have 2 more trading sessions. Just quickly, these monthly charts, the Dow overthrowing the trend line here like it did in 1929, overthrowing the monthly trend line and then now pushing back sharply. What the monthly close looks like there, but it did overthrow it, as I've mentioned. I told you it was likely not going to be able to stay above it for very long. That's a 125-year trend line, by the way. Now, 2.5 weeks ago on Black Friday, we reached the trend line in the monthly time frame on the S&P 500. I told you again, likely overthrow it, and we did, but I told you we're probably still going to try to go up to that trend line in the weekly time frame. So far, not been able to reach it. Maybe I'm wrong about that. Again, it's close but no cigar. We'll see what happens. It is possible, again, that we don't reach it and we're starting a reversal now. We've had a strong sell-off. We'll see if we rebound over the holidays on very, very light volume, which is often the case. Now here it is up close, and again, so far on the monthly chart, we reached that the very last day of November, which was Black Friday, and then we went a little bit higher. And we hit that 6,100 area and we turned down off of it. The trend line on the weekly chart was at the high 6,100 area. If we took our time reaching it, we could go to the 6,200 range. I reach it if it diverges, if the S&P diverges with NASDAQ. NASDAQ's topping right now. So far, we're turning off of that trend line here, and again, we may overthrow it a little bit more, still try to reach that weekly trend line. But it is possible that the S&P now has topped as well. I think you got a good shot the Dow has. Had a 10-day losing streak. At some point, you're going to get a rebound. Watching what happens to the S&P. Again, we're going into the holidays, the holiday trading, and you get a lot of manipulation. Go up, could go down, could go both further and then get a rebound. We'll be watching to see what happens. I'm looking for a top here in December or January, as I've been saying over and over in every single video. Again, NASDAQ also stalling at this longer-term channel in the monthly time frame. Previously, the 2021 peak, if we exclude the shadow here, we hit that. It was a parallel boundary. But if we include it, here we are right at this area. We hit the trend line. We overthrew it. We are right now getting a topping tail, but the month is still not yet complete. Slightly, again, like S&P, overthrew that trend line and then turned off of it here in the monthly time frame. And by the way, again, NASDAQ and S&P, they're going to be headed eventually. When we peak, and NASDAQ may be doing that right now, possibly the S&P. Actually, we're going to head back down to these lows down here in 2022. Possible massive head and shoulders. Now, the momentum line was bearish as we were going sideways in the triangle. It's still bearish. But the cloud never did flip here. When we were going sideways, the bars remain blue, but now we have a reversal of conditions with momentum. You see the little red arrow, you see the little red bar. So we'll be watching to see what becomes of that. You know, is it something like what we had before the presidential election where we saw the triangle break down, but then it rebounded back up? Or again, do we get something uglier? Do we go back and fill the gap on, the presidential gap there that I'm showing you in the 60-minute time frame. I've talked about a possible divergence developing here. We still have the red awesome oscillator bars, but we're still in positive territory. The MACD is still in positive territory, so we'll be looking. Do we get a bigger dump, getting more and more evidence that, hey, the top is in, or does the S&P end up attempting or going lower and attempting some kind of recovery and end up diverging with the NASDAQ? And don't rule that out. It is very, very common. Back over here at the July peak, they diverged. We saw it back at the 2022 top for the S&P. NASDAQ had already peaked in 2021. Watching to see what happens, and pointed out as we started the week, we got this red bar. We still have it, and we'll be watching to see, and I talked about, do we take out that 10-week moving average? Should we start getting a reversal of conditions here in the weekly time frame? Losing the 20-week would be very bearish. The 50 level on the RSI would be very bearish. We'll see what the week looks like. Sometimes you get the red bar, and that starts the reversal process. Other times when you're forming these divergences, other times you get the red bar in the weekly time frame, and maybe the first, second, or third bar, you get some kind of new high. So again, it is very possible that the S&P has now peaked. Still just as possible that we end up seeing the S&P diverge with NASDAQ. We'll see how we close for the week. We'll see what happens over the holidays. Very light volume. The market can easily be manipulated if retail investors come in and buy it up. So does it make a lower high? And again, I'm looking for a top, and it's possibly in on the S&P, but I need more evidence for that. I do think the Dow has likely peaked, and we could be witnessing the NASDAQ peaking. Is it possible these divergences are now starting to play out? Very possible. And I'm looking for a top in December or January, and maybe we failed to reach the trend line there in the weekly time frame. Certainly possible. Despite the 3% drop or 3.5% drop on the NASDAQ today, no red bar yet on the awesome oscillator in the weekly time frame. MACD not rolling over yet. Very interesting. Stochastic is a little, we're still above the 10-week. We'll be watching to see what happens going forward. Do we attempt a recovery? See a big rally back up and end up getting some kind of doji. Mark my words, if we get a rally with the PCE, do we get a big rally back up on the NASDAQ? Get some kind of weekly topping bar. Get that bearish inside day on the daily on Thursday. I talked about that. It's also given us a bearish reversal of conditions. You see the little doji there? That was an inside day. And again, it was a wide range bar up, and then it was a down day, a gap lower that gave us that, and that's now being confirmed. We need to see a follow through. But here in the daily time frame, the awesome oscillators moved to new highs. And again, now we're getting the red bar just with this first day, red arrow, red bar. Momentum is shifting now after being very, very bullish. NASDAQ going higher. The S&P had corrected sideways, now going lower, and the Dow and the Russell sharply selling off. In the month of December, all this selling that we told, there's no possible way you can get any kind of selling in December. Seeing that. I told you that was a possibility if we don't reach my objective target. Could be we drag it out and reach the objective target in January, as I've talked about that scenario. And it could diverge. And again, NASDAQ could be peaking right now and diverge with the S&P on into January. Very possible. Daily chart here of the NASDAQ. Confirmation now of that inside day. Let me show you this up close. This is pretty remarkable looking. When I bring it up even closer, this bar is massive. But look at this. One bar, you wipe out with that bearish Harami pattern. You've wiped out all the gains from the December 4th gap higher. Remember, December 4th is the day the Dow peaked. NASDAQ still went higher, but we're coming back now to fill this gap on NASDAQ. So we'll be watching that. Have another gap down here that has not been filled. And again, we'll be watching to see, do we keep selling? Do we rebound back up with the PCE data, or does this thing just now start collapsing? We'll be watching to see how it unfolds, but there is distribution that has been taking place into the rallies. Here's the rally with the presidential election and the Fed, distribution. And then now we're seeing it here. We saw it a little bit right there, but we're seeing the rally sold. We go higher on the NASDAQ, but what a massive, what was it, down 3.60% today after confirming the bearish inside day on the NASDAQ. Remember, we had a bearish inside day right there, but there was no confirmation of follow through. We still got to get a follow through here if this is going to be a reversal. We'll be watching to see though, does NASDAQ stop making new highs right here? It hit that monthly trend line. And here in the daily time frame, you've got your bearish potential reversal, bearish Harami pattern. Inside day that we had with that doji yesterday. Forget NVIDIA has that head and shoulders pattern, and we're trying to breach, and we'll see how we close out the week. I'll show you on Friday how we close out. But we're trying to breach that trend line in the weekly time frame ever so slightly. And here it is. So we're going to be watching to see how that plays out. And does the RSI end up moving here now below 50 by the end of the week here by closing that way is what I'm referring to. You only get 1 bar per week, but we're watching that. Seeing the momentum roll over, I talked about this. Above that upper Bollinger Band, we had the overthrow. Remember, I told you sometimes we overthrow the upper boundary of a rising wave. So it's possible NASDAQ is now peaking with our bearish Harami pattern in that inside day. We've actually come back down below that trend line, and we're resting there just below our 20. Take up this trend line a little further right here from the August low right here. We're coming right at that trend line. So we'll be watching to see what happens at that trend line right there. Does the overthrow mark a peak now for the NASDAQ? And again, do we try to rebound or go a little bit lower and try to rebound? End up making a lower high. The MACD is curling over here, getting a bearish, looks like a bearish touch on the MACD. It has moved to a new high above the previous peaks, and I've talked about that. So again, looking for clues. We had this little divergence here, and again, turning off that upper Bollinger Band we just saw. So again, we'll be watching to see what happens here. And let me repeat, I am looking for a top. This is possibly it now, this confirmation of the bearish Harami. And like the July peak, you know, we rallied back up. We got a lower high. We could see that and see the S&P moving into the holidays, getting a higher high. That is still possible. I think the Dow has peaked, possibly the NASDAQ right here. I think you got a pretty good shot that the Russell has peaked. The S&P 500, still questioning that. Now, as we got the overthrow here, and again, we hit that monthly trend line in the weekly time frame, I've been talking about a couple of different trend lines. This is a 60-minute chart. I've been talking about that multiple point divergence on NASDAQ. Again, that could be, again, marking a top right here. Again, we had multiple points of divergence here. Divergence over here, pullback, and then now we built upon that. So, well, we've seen new highs forming this divergence. S&P went sideways and got those lower highs. Little divergence that gave us a sideways move on that 60-minute chart that I've been showing you on the S&P. That MACD is not rolling over yet. And again, here, here's our log scaling. I've talked about this trend line right here. If we still try to go higher, keep in mind that is the log scaling. I talked about this trend line right here in the weekly time frame, but this is the linear scaling. This trend line right here, the black one, we were just underneath it. We were just shy of it, okay? And if we exclude the shadow marked in red right here, the trend line in red, if we exclude the shadow right here, then we tag that and slightly overthrew it. That would mean I'd have to make slight adjustments down here. Again, this channel is connecting the lows here and, again, excluding the lows over here. So some trend lines I was watching, this upper boundary here. And we'll see how we close. Do we rebound back up? Getting a hanging man or something like that, or a doji or something. Yeah, it's going to be interesting to see how we close the week out. NASDAQ and this sharp 3.60% sell-off that we got there on the Fed day. Now, if you zoom out here again to the pandemic low here and again to the 2021 high, we overthrew that trend line. We're now pushing back below it. We'll see how we close by the end of the week. But again, the trend line's here. And then this red trend line is interesting from the pandemic low to this low here, coming up to this peak right here, pointing up to that level. So that's an interesting trend line from the 2021 low that we are turning down off of. Interesting. Again, watch these divergences, and again, we'll be looking at them going forward into the holidays. And how do we close by the end of the week? Strong or weak?